The conflict in South Sudan is really a reflection of the similar types of geopolitical conflicts around the world. This is putting a floor under prices, even though production is rising quite rapidly in North America. And we see that Sudan and South Sudan together account for about 2 to 3% of Chinese imports. So it's a significant portion of Chinese oil supply. We think that oil prices are being caught between these geopolitical conflicts that put a floor under prices, but then also higher supply elsewhere. And
for China, they're also looking ahead in terms of energy security. Are we likely to see them invest in more African nations?
China has been doing a lot of that. It's been investing more than $100 billion in the past 4 or 5 years overseas. And we think that China will seek to diversify, to invest in unstable countries and regions, but then also in stable countries and regions. It's also going to book up more supply from countries like Russia in the future. So China is definitely going to go out, but then also try to diversify the places where it invests.
Is China, Xi also behind the strong rise in copper prices recently?
The short-term rally that we saw in the past few weeks was more driven by short covering. But yes, Chinese market was relatively tight. China has been importing more and more copper in 2013, both because China had a very strong demand for things like copper wiring, but then also because China needs to import copper to turn it into financing.
So where do you see copper prices in the near to medium term?
The interesting thing is, supply is now driving copper prices more than Chinese demand. So we are actually forecasting prices to come off about 8% into 2014, around $6,700.
So you see copper then underperforming. Which other commodities do you see underperforming this year?
We think that some of the other commodities that will see a moderate decline in prices will be crude oil, again, because the global balances are becoming a little looser and more adequately supplied.